Hello friends, welcome to Nirmal Bang. I'm Piyush Jain and today we are going to do a result review. This time result season has been very kind to the investors, viewers. Most of the corporate universe actually has been delivering good results. And we are talking about a company involved in the railway sector, Jupiter Wagons Limited. No stranger to our show. Joining us today on the management, Mr. Sanjiv Keshri, the Chief Financial Officer of the company. Sanjeev ji, welcome to the show.
Thank you, Piyush.
Now, before we talk about the results, let me talk first about the flavor of the season, the budget. Uh, Vote on account this time, perhaps nobody was expecting any major announcements, but from a railway perspective, the sector which is core to your business, we heard a couple of announcements. So, just a top few from you. We basically heard the finance minister actually allocate another 2.5 lakh crores as capex for the sector. We also heard basically that finance minister said three new corridors are going to be announced: energy, mineral, and cement corridor. And there is also port connectivity corridor, and there are high traffic density corridor. To me, it sounds that perhaps with these corridors, they might need more sort of commercial wagons. So perhaps that is one part. And then also, finance minister sort of laid out that perhaps more sort of expenditure on the other development part, like tracks and bogie passenger bogie upgradation. But we'll focus on the commercial part here. New corridors, is that something which generates a potential business for you?
Yes, Piyush, you are very correctly said. The government vision lays a solid groundwork, and especially on the capex allocations, they increase the capex allocation again in this interim budget, which is very helpful for the our business also. The rail port connectivity under DFC, more than two corridors to be set up by the government, three more rail corridor, as you said, for energy, cement, and the minerals. This to be added the apart from the DFCs and capex target again the 3.4% of the GDP. So we are looking a very good opportunity in this area. And again, when the corridor will increase and the rail port connectivity will happen. So obviously there will be a more demand from the government as well as from the private both.
Right, and from that perspective, how and where your position on a capacity perspective, because I was seeing your order book, and before we go to the numbers, we have straight away talking about the order book here. The order book is already actually 7,000 crores, humongous order book, and the street has applauded your stock also for that. There has been a multifold increase because the order book actually continues to surprise the street. Where are we right now in terms of the capacity and utilization?
See, as we discussed the last time, also we have done the QIP and we are going doing the capex very frequent. Means on its ongoing. We are increasing the our capacity. Now we reached the our production to around more than 800 wagons in a month, which you can see from our result itself this quarter. Despite there is a long holiday in October due to the Durga Puja and other festivals, we lost the 10 days production. But despite of that, we reached that number. And this 900 crores is our achievement. The Jupiter has not ever given this kind of the results. Coming to the order books, they say we already disclosed that the 1600 crores orders from the Indian Railway for 4,000 new wagons. We got the defense repeat order. And again, we are now manufacturing a new kind of the thing, double decker automobile car carrier, which is the highest in length ever the Indian Railway have. So this is a totally new technology. So we are very robust that, and again, as I told that in the new DFC corridor and in government focus on the capex. So we are looking a very robust 3 4 years, next 3 4 years in the
I'm,
demand.
I'm tempted to ask you before I even go into the revenue numbers. I'm tempted to ask you right now. So, if you're investing in your capacity right now, what's the blended utilization or maybe the wagon utilization?
See, we are doing the capex in both the place in the wagon manufacturing. We have two facilities right now. One is in Bandel, which is a totally integrated plant where we have the foundry and the wagon manufacturing both. And in Devri, right now, we have only the wagon manufacturing. We don't have the foundry. The castings are totally, we are transporting from the West Bengal to Jabalpur. So we are incurring a huge transportation cost there. So the after this the foundry plant will come, we will double our the casting facilities, and by that there will be a huge jump in our capacity. So I think we are working in the same line as the government is doing the capex for the country.
But sir, perhaps our viewers will try to imagine, like, if suppose where we are right now at the end of FY24 financial year, March quarter, what sort of capacity increase actually are you expecting over the next 1 2 years?
As I told that we reached the around 800 numbers of wagons in a month, and after reaching this capacity, I think we will cross it 1,000 number. So we are looking around 12 to 13,000 numbers of wagons in a year in FY25.
Okay, and that's a material increase, like from 800 to 1000 itself is a 25% increase. So that actually holds well again, basically for the future.
And this is, yeah, and this capex is not only increase the wagons capacity, we are also producing the CMS crossing. So today the our bottleneck is the casting facility. So the
Hmm.
CMS crossing production will also will increase. You will see in next in 2025, because we have already got the order of around 180 crores of orders, which will get going to be executed next year.
Okay, that's good to know. And what about the commercial vehicle bodies? Already, actually, we have seen a huge jump from the perspective of sales. Like we are almost talking about a 30% increase in the volume growth there. Where are we right now in terms of capacity there?
This is again the totally fabrication. So we have the good capacity. We are working right now around 60% at capacity. There is a huge potential to increase that number. And again, the government focus on the road also in this in budget. So obviously the demand will increase. So we will optimize our the capacity utilizations in the CV also.
Right. So if you're only at 60% right now, it implies basically another 25 30% basically is easy without any investment. So that's something
Yes,
is
yes,
very
we have the capacity, and that can be increased.
okay. So while we talked about the capacity, now let's talk about the revenue numbers here, sir. Almost 39% growth in revenue, stupendous growth. Between this growth, sir, was there any element of price mix growth also, or this was largely a volume growth?
Both. In terms of the CV business, there is a good number. There is an increase in the price also in the wagons also, and again, as we are telling in the last few quarters that our mix in the wagons, which is the mainly 80% of the revenue, total revenue
Hmm.
generating unit, where our private orders are very robust. So this is the one of the reason that the margin is good.
And the defense and the private orders, they would be largely higher margins, sir, right?
Not only the higher margin, we require to do some more technological things also there. So if you include any technological things other than the only fabrication, so there would be always a additions to that.
Sure, makes sense. Absolutely makes sense. From there, sir, also, though it's a small number, but just a bit on the other income also, is it largely a treasury income? There has been a jump, a small jump of 3 crores. Is it largely a treasury income?
We have the right now generating a very good number of the cash. So that cash we are just parking somewhere, and that revenue we are generating.
Okay, sir. EBITDA margins showed a good steady sort of improvement, another 140 basis point. A function of the same thing, like improved mix, improved product profile, customer profile. Was that the reason for the margin expansion?
Yes, you are correct, Pius. And again, if you increase your revenue with the same infrastructure, not doing much
Hmm.
investing in the fixed cost, so all the costs are not the directly proportional to variable cost. So there are semi-variable also. So that's give the extra some basis points in our EBITDA margins.
And here is where actually we sort of develop this answer more, because I'm tempted to ask you. And we actually talked about the capacity first, how you still have a lot of scope to really go up. And I'm still just thinking, if the utilization keeps going up, primarily actually you still have a lot of headroom to really optimize the EBITDA margins more over the next 4, 5, 6 quarters.
Yes, there are scopes. As you know that we acquired the Stone India
Yes.
last year in May, and that production we presume that will be start by April. So where we are manufacturing the thread brake systems, and that will be totally captive consumed. Today we are buying from the outside, but again this will give a extra legroom in the EBITDA margin. Again, we are working as for the QIP. We already disclosed that we are going for the inorganic growth. So that we are looking for some acquisitions, more acquisitions. By that, and again, these acquisitions are related to the our backward integration only. Uh, so that will give some extra legroom in the EBITDA margins.
And acquisitions will be in the range of what? Foundry, or like which type of acquisitions, which sectors you're looking for?
We are looking for the see today all the components we are manufacturing within our with the subsidiary or JV. So we are looking for now the on a wheel sets. So we are looking for that
Okay.
aggressively working on that. Yeah,
Wheel sets.
right.
Okay, sir. Point noted. Um, from the perspective of now, your EBITDA to interest, anyways, is actually extremely good. So, finance cost will be largely a function of working capital. Like, there won't be a, sort of any major debt burden.
No, as I told that in the other income we are generating cash, so we are sitting on that. If you see the our net debt liability, so it is all positive. There is a no debt.
Absolutely, absolutely. So I think what better combination? I think the investors and the viewers can get strong growth, still a lot of room for margin optimization, capacity going up, huge order book, and also a huge sort of expanding market. Classic combination, absolutely sweet spot. From there, sir, let's talk about basically the sort of other. What is the strategy now? Where actually really the sort of order pipeline is looking to you?
See, the orders we already have for next 2.5 years for the wagons and the things. Today, our the main focus right now on the JVs and subsidiaries. We have the two JVs right now. Both in both the we have a good numbers of orders. The Covis already started last year the productions, and in JWL Daco, which is in the manufacturing of axle mounted brake discs for the high speed trains for the passengers and the metro coaches. So we got the good number of order there for around 112 crores in January, in December, January itself. So now that JV will also get start operating. So our focus is on that again on the Stone India. Our focus is to start at early as possible because that will be give a good margin effect on the Jupiter wagons and the dependency on the outside will get reduced. Third is the our focus is on the LCV. That AI certification is going on. We are awaiting for that certification. After getting that, hopefully, as we planned by March end or April beginning, the LCV launch, commercial launch will be also happened.
Very nice, and that perhaps will also be an export opportunity also.
In on the export side, we have already signed the MOU with the rights, and they are good a good opportunity. We start doing the good number of export for the from the JWL Covis, where the hubs we are manufacturing that is going to be exported this quarter. A good number of export is there. Uh,
Yes, to
on the wagons also, there is the opportunity.
right. So I'm tempted to ask you, like from the perspective of Stone India, full operating level, what's the sort of revenue accretion you're expecting at an ideal level?
See, today Jupiter Wagons is buying the brake system from the outside around 150 to 200 crores on a year. So our first aim is to achieve that to cater the entire requirement of the JWL. So
But
the first,
Super India has a
yeah,
very good capacity, sir, right? So I think even that will not fulfill major part of the capacity. Will that be a right statement?
I didn't get you.
I'm saying Stone India had a very good capacity. So perhaps
Yes,
your
yes,
internal
we have. Yeah, yeah,
usage also will
yes.
not absorb that much capacity.
Yes, correct. But the our first 2 years target is to achieve the Jupiter wagon to cater the Jupiter wagon. After that, we will start expanding the capacity of Stone India. So
Sure.
our plan is to go gradually, not on a one time, and then
Absolutely.
start incurring loss.
Absolutely makes sense. One sort of question on the brake disc assemblies, because if wagons are increasing, then either standalone or with wagons, your brake disc assemblies also actually would be increasing. But what sort of growth are we expecting there? Similar to wagon growth?
See, the on a freight wagons, yes, if there is a growth in the freight wagons, obviously there is a demand for the wagons brake system also. And again, the government focus is on the passengers now. Bande Bharat and the metro coaches is also going to start manufacturing. The government focus is there. So obviously, the JWL DACO will get benefited from that because the this brake system is only for the high speed trains.
Right. Okay. So definitely, actually sounds good. Any sort of when basically the sort of QIP is going to be moved, sir? What's the plan around that?
For the QIP, that is already done. We raised the around 403 crores. The
But no,
plan was
I was thinking, do you need further, or now you don't need for the next 12 months?
right now we don't have any plan for that, but we will see that how the if there is a new opportunity or anything will come. So we will see again.
Yes, I was only asking this question because looks like growth is all around you, and it's more about basically how much you're tapping it. So, a great order book, 2 year plus order book, great growth, absolutely sunrise sector. Looks like everything is going for you, and we extend all the best wishes to you for the upcoming quarter also, and we'll stay in touch with you. For now, sir, thanks a lot for coming on the show and giving us insights about the December result.
Thank you, Pius. Thanks a lot.
And dear viewers, that was Jupiter Wagons. Hope you enjoyed this conversation. For now, it's a close on this conversation.
Subscribe to our YouTube channel and click on the bell icon to never miss an update from Nirmal Bang.